Hello, everybody. Fernando Petineroli, listing agent with Desert Platinum from our office in Sunny Isles Beach, live at 5:31 p.m., March 13, a day with the markets recovering, movements in everything, but especially in lending. I want to be in a minute with Alejandro Uribe, one of our lending experts. I want to share with you this title that is now Mortgage Rates Jump Back to January High. And this is the perfect moment to talk to Alejandro Uribe. Alejandro, hi, how are you? Welcome.
Good afternoon, guys. Well, it's been a crazy few days. People in our industry haven't slept a lot these past days. Usually, when the stock market starts losing money, it has an inverse relation to the rates, meaning that when the stock starts losing, rates start improving, lowering. And that happened in the first few days. Everybody started refinancing, purchasing. People that had decent rates wanted to reduce it, and it created a huge clog in the system. So many people were applying. We were taking 5 times the amount of applications in one day that you usually take. Nobody expected it to be this way, and many banks were not prepared, to a point that some banks actually preferred not to get the overflow and started increasing their rates to not be attractive to the client and to not clog up the bank even more. If you call most banks today, they're going to say that your closing will be in 90 days because of the amount of volume. That was at the beginning when we had very favorable rates. For the past 2 days, it's changed. Rates are changing every 15 minutes drastically. You'll get a phone call at 9 in the morning, sometimes even 8, they start calling. You would quote a rate, and 2 hours later, you have to call them and tell them that the rate changed. And the issue is that a lot of people are being very greedy and trying to read this market. And I have people that had a 4.8 currently, and I was offering them a 3.3, and they said, no, let me wait until it goes down through a 3.1. And it didn't, and it hasn't. And it seems in the past day or two that it won't. Rates right now are back high where they were last month, and it's very volatile. We are very fortunate to have systems and softwares that we pay a lot of money for to forecast these rate changes, and we get alerts to lock. Sometimes before these big mammoth banks have the opportunity to pivot and change their rates. So we are able to save clients a lot of money. It's like having a 5-minute or 20-minute crystal ball, but It's still very difficult. So if you're on the opportunity to refinance, do it now. Do not, or not now. Wait till maybe next week and see what happens. And not today, if you did today. You need to have somebody next to you that you trust, that has these materials, that has this technology to be able to lock you at the right rate. There is too much volume out there.
Another question is, I was listening to Secretary Mnuchin talking earlier about the $1.5 trillion that the government will inject into the system. Do you believe that this new liquid coming back will help home buyers somehow to get better loan opportunities?
Well, we had a Fed rate cut a few days ago by 0.5%, and we thought that was going to trigger even more reductions. But again, there is an issue that what's happening if you're the bank and the rates are changing every 15 minutes? You cannot adapt that quickly. So some lenders are saying, I don't want to follow this every 15 minutes. Let's just put it 0.3% higher or a 0.5% higher to be on the safe side, because by the time that the bank actually does their thing and lock, now they're borrowing money more expensive. So that is one thing. And then combined with the fact that it's going to be so much volume and so much clog in the system, banks have their employees for regular volume business. This is 10 times more. So they don't want to ruin the customer service and the impression and the relationships that they have with their current people. And they don't want to take new people to also ruin that relationship and that impression with them by doing a bad job. So they purposely increase the rates to make themselves not attractive until they feel that they have processed enough loans to take more business in.
I was actually expecting that money would actually disappear from the system when the stock market collapsed.
No,
but it didn't happen. It's the opposite.
The money is there. They are lending. There's still more incentives that are going to be done by the government to move money, to have people still doing this. Reducing your rate by 1.25% or sometimes 1.5% is something very attractive. Back to the point that people that are refinancing, don't be greedy. If you get a 1% discount and you're saving quite a few $100s, don't lose that opportunity for the chance to try to save $50 more. So this is the moment to either purchase the people that have been sitting on the bench.
To purchase, yeah.
People that have been sitting on the bench, this is the time to start really moving into purchasing, and do get an advisor and a mortgage lender that knows what they're doing and has the technology to predict these types of movements. This type of action, movement, unpredictability, volatility cannot be looked at or analyzed correctly by just anybody.
We received today people also that is needing short-term loans, like hard money lending. What's happening in that market right now?
Hard money lending has and will still be a huge business. And the misconception is, why would you borrow money at such high interest rates? And it depends on what you're doing. If you're a person that has been self-employed and your accountant has had some deductions on your income and you don't declare the income that you should, but you can afford the property, that's an opportunity to get a hard money loan. If you're a flipper, if you're an investor, you don't want to go through a 30, 45 days and nowadays 60, 70-day closing process, then you get a hard money loan, you close in 8 days, no documentation, make sure you get a short prepayment penalty. Let's say, for example, 6 months prepayment penalty.
How that works?
Yeah, the extra few $100s that you're paying on a monthly basis for the extra interest rate is going to be totally worth it for the aggravation and the time and the opportunity to tell a potential seller that you're a hard money, almost cash transaction, instead of a person with a contract that most likely is going to need 3 to 4 months to close. In today's market.
Correct. That's the problem right now. The time to close is crucial because nobody wants to stay. Right now, I'm mostly a listing agent, mostly. So if somebody sends me a loan, an offer with a 3 months contingency to close, I can't take it.
Exactly.
I can't accept it.
Or I'll give you a contract that has a 10-day closing date, but I need 10% off the sales price. You'll probably take that. Or a 5%
I'm
off the
taking
sales
right now. Yeah.
And so that's the point. So your people that are in this industry have to stop speculating and have to start doing the math. Do the math, and I can help you with it. I have graphs and softwares that can show you not only the cost of waiting, because people say, oh, let's wait. People, foreign nationals, the currencies in different countries have lost a lot of value against the dollar in the past days also. And people are now saying, let me wait till it goes back up. How long is that? And what is the cost of waiting? Well, don't guess.
Tremendous.
Don't guess. Call you so they can get in touch with me, and I'll give them a graph with facts. No opinions. I'm not telling you what to do. These are the numbers. Then you decide intelligently. But this is not a moment to be nervous or speculate or anything. It's a moment to study, do math, and make an informed decision.
I believe the perfect plan is to have like a hard money lending for 6 months to a year, and then refinance, because nobody can accept a 3 months waiting period.
Listen, if you qualify for a loan now, that means you'll qualify in 6 months. So get it out of the way, get a discount on the sales price. You with a almost cash transaction versus a 3-month contract. And in 6 months, you get off the prepayment penalty and do your financing with time. And most likely this volume has passed by then. And you're getting a discount of 10% on a $300,000 property or a $400,000 property. Instead, you're not doing that because you're paying $100 more a month on interest for 6 months.
Correct. Alejandro, how people can find you? How can they contact you right now? People that needs to do both, either regular loans, refi, or even hard money lending.
Yes, my Instagram is Uribe Lender, AURIBE Lender. My name is Alejandro Uribe. I work for Caliber Home Loans. If you're interested, my number is 305-992-5056. But my hashtag is Uribe Lender in Instagram.
I put it there. I'll just put it there so people can have it. At Uribe Lender, is correct, right?
Yes.
Thank you, Alejandro. Can I have you back in a few minutes to do the Spanish segment? We do in Spanish. Very good. We're going to be in mercadomiami.com and in my page in Facebook in Spanish in a few minutes for our friends in Latin America, Europe, and the US. Thank you so much. I'm Fernando Petineroli. Today, Alejandro Uribe helping us on lending, this issue that is absolutely vibrant in a key moment for the markets. Right now in real estate, the key points of the day, prices continue to go low. The market is right now flooded with opportunities for buyers starting at the $100,000, believe it or not, to all the way to the 22 million. So you can call us also to check on your, if you're looking on the market to buy, please visit us, fernando.realtor. There's starting to be, this is my comments. Fernando.realtor, please feel free to visit us online. If for Porsche, you can always visit us at 18555collins.com. I am Fernando Petineroli, listing agent with Desert Platinum from our office in Sunny Isles Beach. Thank you for watching. Bye. Thank you, Alejandro.